All right, we're on. Just checking the sound. It looks like we're connected, so that's a good thing.
So.
October 23rd.
Yeah,
Wow.
it's been because we haven't been on for a while, have we? But
Yep. Yeah, well, two weeks ago, I think we had a broadcast.
Okay,
but last week it was cancelled. Yeah.
Just check on X that we're actually broadcasting.
Let me see. If you don't know, I'm Shane Oglow, and this is my partner Richard Hodges, and we are the Rogue Traders, and we're going to do a little bit of analysis of mostly Bitcoin, because we do trade Ethereum and other things from time to time, but our primary focus is Bitcoin now.
Yeah, and general market analysis, because I think that's relevant, and also we're showing you our positions in our Gravity Vault that we trade, which is currently, I think, the top performing vault on Gravity.
One of them, yeah.
With no one more surprised than me to see that we've got 49% APR return so far. Good sharp under the expert management of Shane to my left.
I'm just refreshing the Telegram channel.
Okay.
I think we should be live. Everything should be connected.
Right, okay.
So let's assume we're live and everybody can hear.
Quick
us.
recap of what's happened then over the past 2 weeks. We've had market going up to 126 all-time high. We've had market dumping down to 101 in a panic sell.
Yeah.
Mass liquidation event. It's a strange market when a 17% move in Bitcoin liquidates half the world.
Yeah.
That means everyone's way too leveraged.
Yeah,
because this is still Bitcoin after all. Right?
It wasn't the biggest move in Bitcoin, but it was the largest leverage ever, which is bizarre. I mean,
it's great.
Over leveraged. Yeah,
and I think that answers the question about whether increasing TradFi involvement in Bitcoin is going to increase or decrease volatility. It's going to increase it because there are just more degenerates doing degenerate things. We have a macro situation where we've got stock market fearful, US government threatening to invest in the stock market, massive amounts of money market liquidity waiting to come out when interest rates drop, if they do. Gold price dislocations, silver price dislocations, and threats of war building up, Venezuela. So it's an exciting time.
There's a lot of factors, I think, is the point. And that's leading us to, I think what we want to talk about is, or what we'll talk about is where Bitcoin is right now.
Right.
And it feels like it's completely indecisive. It's like there's so many things pointing in either direction. Yeah. Which one's going to win out? And I don't know. But let's share the screen.
In the fund management world where I live, a number of funds blew up in the drop and the aftermath. So we've seen we did fine. We didn't lose any money, but we have seen that a number of funds have had redemptions and people getting scared. And I think the market is shell shocked. Right, it doesn't know what to do. My gut feeling is that actually all the signs are for down, but actually I think we're going to go up. If you pull up the vol surface.
And just so people know, this is the Gravity interface, and this is actually our live account. So we have a fund on Gravity you can invest in. And look, Richard here. I just saw this pop up.
Yeah,
we're the featured strategy with 49% APR. Wow, that's exciting.
Yeah.
And just so if people want to look, you can check out Gravity Invest. Here's us here.
Okay.
In our track record, and there's other funds that you can invest in as well.
So you can invest in this one if you want to not lose money. The other ones if you want to lose money.
Well, there's one or two on there that are doing okay. But we're not right now. You can see our position right now. Look.
Pretty flat. Yeah.
We've got 0.026 of a Bitcoin, nothing. It's like $2,800 worth of a position. We're up like $30 on it. We've got a very small position right now. Why? Well, because we're not really sure of what's going to happen right now, and I want to let I don't like to predict moves. I want to let the market dictate what's going to happen. If it wants to rip up, we'll start buying. If it wants to go down, we can sell. So,
and it's worth mentioning. I think I mentioned this on the last call that the Bitcoin market and therefore the wider crypto market is very dependent on the Nasdaq, which is very dependent on tech stocks, and so actually we are in fact trading tech stocks by proxy at the moment. All the AI stocks on Friday sold off because the market finally admitted to itself that they're all overvalued, and then after hours on Friday, that was yesterday. Then after hours yesterday, the US government stepped in and said, "Oh yeah, we're going to go and buy AI stocks." So, causing a massive reversal after hours. So there's going to be all kinds of volatility from that.
Yeah.
And that actually rescued Bitcoin overnight. So Bitcoin sold off to 107, and then recovered back up to 109.5-ish. Yeah.
I think what I don't like about the Bitcoin chart right now, just from a trading perspective, is every time we get a big move up, there's a hard candle down. There's no bid.
There's definitely someone
I don't like
unloading, but there's also, I think people are unloading. People are probably long perps, and they're trying to unload those perps and get a bit less long, I think. Meanwhile, institutions are net still buying. So if you look at the ETF inflows, they're still positive. So I think we're seeing rotation out of old Bitcoiners to new Bitcoiners, and that rotation comes with some volatility. And people obviously also have leverage positions that they've got to kind of unwind and get comfortable with. My strategy for the past 2 weeks is just basically to do nothing and let it mean revert, and that's pretty much worked. And it's probably the strategy for the next 3 months, to be honest. I think we see, personally, I think we drift up for the next 3 months. I don't think we see another all-time high, and there's going to be up and down movements because of volatility from fear and also from the TradFi market. That's my
So in the last 2 weeks, I've seen, I mean, not that I put a lot of faith in tweets and different articles, and we always see all of them, but I saw a lot of articles saying, hey, we're going to 50,000 or 25, and then I've seen just as many saying, no, we're going to 250 by the end of the year.
Yeah.
But the one that kind of bothered me last week was, or early in the week, I can't remember, it was Eric Trump.
Right.
And he's saying, look out, we're going to have a big Bitcoin, big rally. If anybody's got any inside info, it's probably him.
Yeah.
Maybe he's got ulterior motives. I don't know. Maybe it's just what he believes. Does he know something? I have no idea. But I don't want to be heavily short if the freight train's running in that direction.
Yeah, I mean, Eric Trump isn't going to damage. He's got a whole political future ahead of him. He's not going to want to damage his own reputation from tweets that are wildly wrong. So it is my personal view that he has absolutely inside information, being the president's son, and is making full use of it. And actually, that can be to our benefit. So yeah, I don't want to be short either.
And if anybody wants any predictions, not that I give predictions, is I honestly think that, I do feel, you can see I've got some orders down here layered, just in case we get a crazy wick into the 90s. I honestly feel there's a really good chance we're going to poke down through 100K.
Okay.
And then go back up.
Yeah, just to finally clear out all the longs.
I do, and we can take a look at the liquidation heat map in a minute. But I think we're just as likely to find a new range from let's say kind of down here, for example.
Yeah.
To up here. I wouldn't be surprised if we stayed in that range until the end of the year, to be honest, and that's fine.
Yeah.
Buying down here, selling as it goes up. You don't have to short here if you're scared. You can wait for it to come down, and just kind of rinse and repeat. I love range trading.
Yeah, you can make a lot of money doing that.
Maybe that won't happen, but
I'm the same. I'm currently long delta in my options book, but I'm happy to be short a shed load of call options at like 118, 120. I'm perfectly happy with that.
The one last thing I'll mention before we move on, and I'll let you take a look at some stuff, is you can see I don't have any buy orders down here in the kind of the 105 to 109 area. That doesn't mean I won't buy there. I just don't like to put resting orders out unless I'm absolutely going to take them. If all of a sudden the market just dumped as it's coming down through here, I'm going to be buying anyways.
Yeah.
So I'm happy to accumulate, and I'll load the boat if it goes down there. However, if we start seeing some weakness down here, I've got no problem buying, and then putting some buy stop orders, so I'm buying as it continues going up. So just a little glimpse into the back door of what we got going on.
Yeah,
I'll if you want to take a look at the
sure. No, I was just going to say, because that's really important point that Shane taught me actually about futures trading, which is about because I'm an options guy naturally. Never pre-commit yourself. So because whenever you put a limit order in, you're effectively writing an option, and you're taking optionality away from yourself. So by all means, have some options in where you really want to get in, but actually leave yourself the space to say no in the meantime.
Yeah, where you really want to get in regardless of conditions, because an announcement could come out tomorrow
Right.
that Bitcoin's now illegal in some countries and we're going down. So
Yeah.
if that happened, do you still want to be long at those levels? If so, then yes.
Yeah.
Resting orders are applicable for current conditions,
Right.
not for conditions that might be in 10 seconds or 10 minutes or 10 days, right?
Right. So this is the tool I use. Here we go. This is the tool I use. It's called Immersive Finance. I use this in my options trading. And I'm only mentioning it because it gives me a view of how the options market is seeing the market. Options are quite good for indicating current sentiment. And what this complex table of numbers means, and I'll teach you more about this as we go on in the broadcast series. This column here, the 10 delta risk reversals, give me a very strong indication of current sentiment. So this
should explain what a risk
no,
reversal is.
I understand.
Oh, okay.
So this is long story short. If this number is negative, people are more willing to pay for puts than they are for calls. So they're more willing to bet the market's going to go down or protect themselves against the market going down. If that number is positive, people are super optimistic and they're willing to pay more for calls than they are for puts. So at the moment, 10 delta puts are trading 10 vols above calls, which means that people are moderately bearish about the short term. So over the next couple of 3 weeks, 1 month, people are willing to pay for protection. Is the message here? Now normally this is kind of more like minus 5%. So people are always willing to pay for protection, but right now much more willing. However, 2 days ago this number was minus 17%, and that was on getting near the extremes of where people buy protection. And what's interesting about this number is that it's reactive, so it doesn't predict. It tells you what people have been doing in the options market in order to protect themselves. And people generally only do that when they have to. So it tends to be a lagging indicator, which means that if we see extreme negative in the 10 delta risk reversal, I tend to think this is probably a turning point.
Yeah.
Because everyone who needs to buy puts has bought them.
Yeah.
And everyone's panicked. They've all covered themselves, and now no one's selling because they're protected, right?
And there's the old adage in trading: you should buy protection when you can, not when you need to.
Exactly.
But most people operate the other way, right?
Right. So if you ever see we can teach you later how to compute these numbers for yourself mentally, just by looking at the options markets. But if you see a call option and a put option at the same delta, there's a delta number attached to them, and we can teach you about that later. If the call option is more expensive than the put option at the same delta, then this number is positive, and the difference between the deltas is the difference between the implied vol is the number you're looking for. Sorry, it's super complicated at this stage. Then that tells you that this risk reversal is positive. If this gets to plus 20%, then that's normally an indicator that you should be buying puts, because everyone else is buying calls, and everyone else always does the wrong thing in the options market, particularly with the skew, which is what this is measuring. And then on the other side, we've got at the money vol, which is the implied volatility of Bitcoin. This is elevated. This is normally about 35% at the moment, currently at 45%. Indicates that people are relatively scared about the range of movements that Bitcoin can do, which gives us an indication of where we think how big the range is going to be. So I think this range between sort of probably 105 to 120 is my kind of mental model of the range. I think you're right. Extreme pokes down to 100 could happen with like a 25% chance, I guess, is my view.
And I expect that to happen if they're going to move it up. They've got to flush liquidity. We can take a look at the heat map later, but that's usually the modus operandi. That's usually what happens.
Yeah, and then I think this tool from CoinGlass is also extremely useful. Is that current?
Yeah, it's current.
So
we showed it last time.
We showed it last time. Yeah. So here it's telling us that the recent liquidation levels are actually quite down at 106-ish. So if there is going to be a strong surge up, they're definitely going to come down and push into that 106 first. And so if you see the price come down to 106, there's a good chance it surges up afterwards. And if we go out a few more weeks, it's like 2 weeks because that encompasses the crash as well. So there we are, but not a huge amount. Actually, not a huge amount of liquidation levels anywhere, to be honest. I mean, actually, numerically more on the call side. So I'm kind of when this surge up happened here, I kind of thought, yeah, we'll probably go up to 116 and down. But
Yeah. But you can see they punched the liquidity
Yeah.
like precisely.
yeah, it's pinpoint accuracy. Yeah. So
So there's a lesson here I'd like to mention.
Yeah.
Is if, let's say that this price is coming up and you're like, oh my gosh, is this going to go? Expect it to punch that. So if you put your stop here with everyone else, you're going to get stopped
You're going
out.
to get stopped. Yeah.
You're better off put your stop up above and just wait and see if it just get punched and then it reverses.
Yeah.
It might keep going. Who knows? But so often we see that punch and then a reversal.
You definitely, if you're going to put stops, put them beyond those liquidation levels, and if that means that you're going to get uncomfortably long or uncomfortably short by doing that, trade in smaller size.
Yeah.
This gravity vault that we're trading, and in fairness, Shane has traded most of it so far because I've been busy. This has been doing super low volume, right?
Yeah, well, since we started, there wasn't. It's been, we've been very delicate and just kind of waiting,
tippy-toeing through the markets, and we've made 11-12% in 3 months, which is perfectly happy with that kind of return, right? It's super safe. Didn't frighten anybody. No drawdowns.
Yeah.
Nice, good Sharp ratio, and done with almost no trading size. You don't have to be brave, right? You can be cautious and still make money.
Yeah, and there's going to be times when we're going to go bigger and heavier.
Right,
they just didn't present itself
Yeah.
to us in the last 3 months. So
Yeah.
fine, that's fine. So we'll just make steady gains, small trades here and there, make this the spread of the range. I'm happy to do that until we get a strong movement one way or the other.
Yeah, and if we get a strong signal, and we've got super strong conviction, and we've got a surge going up, and there's all the signals are with us, we'll tell you, and B, we'll go in hard and then make big money. But a huge part of trading is the discipline to do nothing when the market's not in your favour, because you get to the computer and you feel like you want to do something, right? And it feels kind of, you get twitchy. And if you succumb to that, you're going to make bad trades. It's better to, if you don't know what to do nothing. Is my sage advice.
Yeah, it's better to be out and wishing you were in than in wishing you were out,
Absolutely,
right?
Yeah. As a case in point, I mean, you may have seen in the news over the past few days the Beyond Meat story, the big push. Well, I bought some call options in Beyond Meat at $3.50 calls. I paid 4 cents for them, and I sold when they were, I think, something like 30 cents. So I made like 8x my money, and I was initially happy with that. And then I saw Beyond Meat surge up to $9, and I thought I could have made, with my $10,000 bet, I could have made $300,000, and then not had to have traded for the next 3 months. And but then the reality is that there's always tomorrow. This kind of stuff happens every day, right? You can't worry about it.
And you never know what's going to happen, right? So it's nothing wrong with taking some profit.
Right.
You want a little bit run sometimes, leave a little bit left in case it does something completely unexpected. But how often does something do something completely unexpected? Not that often.
Right.
So you're better off taking it off the table.
Take off enough to cover your bet, and then leave the optionality in. But hey, so the thing is that you can only lose your stash once. You have an infinite number of opportunities to make money as long as you've still got collateral. So you must protect your collateral with all your heart and soul.
That's right.
And never take a risk unless it's an absolute surety. You never make a bet, never gamble. You trade with conviction because you are right.
Oops. Yeah. I was just going to quickly go over here. Oh my gosh, come on! I wanted to take a look at ETH just to see, because ETH can be so goofy sometimes.
ETH is a dog. It's I mean, there are people who are convinced it's going to blast up to 5,000, and there are people equally convinced it's going to be down to 1,000. Right? It's the same thing. Yeah. As far as I'm concerned, ETH is a random number generator. Yeah,
we've struggled, and the reason why we come to that conclusion, I used to trade ETH almost exclusively, certainly on the options side, but it was just really difficult to make money with options on ETH compared to Bitcoin. Yeah. I found, anyways, certainly my style. Maybe somebody else has a different style, and they like trading it better, but
you've got to be a massive swing trader, I think, to trade ETH. You've got to have super conviction and go, hold on for dear life.
it does feel more like the wild card, doesn't it? Yeah. Okay, let me go back to Bitcoin, and if we want to go back to the heat map or whatever you want to look at, we can.
Yeah. No, I think
Anything else you want to look at with immersive? I don't. Maybe next time we can talk a little bit about what the delta is, what that means,
yeah, sure.
and why you look at the 10 delta risk reversal. What's a risk reversal? Why is that important versus the 25 delta?
Well, I mean, the only reason I look at the 10 is because it's more sensitive than the 25. This 25 delta risk reversal is the difference between puts and calls at 25 delta, which is kind of the area most people trade. 10 delta is the wings where most people don't want to trade because if you go long there, you're probably never going to get paid, and if you go short one time in 10, you're going to get hosed. So that's where.
Just a quick thing for people. I think if we talk about delta, there's lots of ways to look at delta, and there's things they do. But the one thing to keep in mind is delta is more of a probability generator. Right. So
you can think of 10% delta as there's a 10% chance that you'll get paid if you buy this option. Yeah.
Or the market thinks that's valuing that.
Roughly.
Yeah.
I just use this number rather than the 25 just because it's more sensitive. So you get bigger swings, and people tend to protect themselves in the wings. So when they buy protection, they buy lots of puts out at 10 delta, or they buy lots of calls at 10 delta to protect themselves against extreme moves.
And those are cheaper because they're farther away from the current price. So.
Right. So that just gives me a more better reading of people's sentiment. So, but like I say, it's a lagging indicator. So you should almost do the reverse of what it's telling you. So this is showing me moderate fear at the moment, but it's come down from abject fear. And so it's telling me that people are getting a little more complacent as the price comes up, as the dips don't go down so far. We only got down to 107 last night. Didn't punch through something nasty. People are getting fine. Maybe the market isn't going to sell off, and so they get more confident. They buy fewer puts, and so this number rises. It's just telling me how people are feeling in the market. But in terms of future sentiment, I'm kind of normally I'd look at the actual at the money vol in the markets, but at this rate, this level, it's not really telling me anything. It's not telling me that people are super complacent, and it's not telling me that people are super fearful or optimistic. So that tells me that the market doesn't really know which direction to go, and it's therefore probably going to range. That's kind of my rule of thumb.
So there's a lot of talk, kind of going back to Bitcoin and price action, because a lot of people are like, I don't know what to do. Is it going to go up? Should I just go long and pray and hope that it goes up and breaks new highs? Well, you can. But what about this? So we've all seen gold and silver make these massive runs. Now, we did have a bit of a pullback, sell-off the last couple of days. Yeah. But there's a lot of talk about USDT, gold, treasuries, Bitcoin being added. There's talk about XRP. So I think that's a even though it's kind of a conspiracy right now, it is a possibility.
It's definitely some upside potential, and you should limit how bearish you want to be. And I think actually more relevant is the number that in the US money market funds, there is currently $7.4 trillion invested. Right, that's hedge funds and individuals and companies who've got spare cash have put their money into these money market funds. Sorry, I'm banging the desk. And the money market funds buy US treasuries, US bonds, which are paying about 4.5%. The president of the US desperately wants interest rates down. The US desperately wants to print more money. It is quite possible that the yield on these treasury bonds drops, in which case people will pull their money out of these money market funds. And remember, that's $7.4 trillion, and that's, bear in mind that in the last Bitcoin pump back in 2010 and 2000, and COVID, that number was less than half the amount. And so it's quite possible that something like $3 trillion of money comes out of these money market funds and goes into other stuff. And that other stuff is going to include Bitcoin, stocks, property, you name it. It'll leak in. And even if only, I don't know, 200 billion leaks into Bitcoin, that's 120k right there, right?
That's a lot of money. Yeah.
So definitely keep an eye on treasury yields because there's a huge torrent of cash that's waiting to get invested that is currently in treasuries. So yeah,
It's funny when you talk about this 7.4 trillion number. I mean, it's a big number, right?
it's a humongous
But
number.
this morning, because Tesla had earnings last night, right?
Yeah.
And I took a look, and they're down a little bit based on their numbers. But part of the equation with Tesla is that shareholders are still debating Musk's package, and I thought it was 1 billion, but you corrected me. I took a look; it's 1 trillion.
$1 trillion, like Dr. Evil. $1 trillion.
Yeah, and we're talking about 7.4 trillion in the money markets. I guess if Musk got paid that every year in 7 years, he could. I mean, $1 trillion. That's a crazy number.
If Tesla meet their targets and Musk actually gets paid, then he could literally double Bitcoin overnight himself. That's how, because Bitcoin's still only what $2.2 trillion was the market. It was $3 trillion, something like this. It's it's 2.2, I think it is roughly.
Yeah.
So I mean, any large number of hundreds of millions will move the market hugely. Have you got any comments?
I'll take a look here, just because, and you can comment. We're not really doing sort of a Q&A type thing, but we're happy if somebody does have comments. And there's lots of people watching the stream, but no comments. So
yeah, you got like
what?
11 comments there underneath it. Or are these people just?
Those are older, aren't they?
I don't know. Can't. Okay. No one's.
Yeah, those are older ones.
Yeah,
There's
right.
the new ones. So, anyways,
Yeah.
back to it. That's so. This is why I am sitting in a position where I don't want to take a big position and risk 5 or 10% of the account or something.
Yeah.
When I really feel that we could have a liquidity punch that's going to, push us down. Well, this is 2 weeks. Let's take a look at 1 month, for example.
Yeah.
It's
It's going to be 3 months now because that big wick took out everyone.
Yeah. So this is not giving us much either. Jeez Louise. I mean, I'm not going to go 6 months. I'll take a look, but it's probably not going to show much.
It's going to be super die-hard money that gets taken out now if there's a wick down.
So look, low 90s. Like this is 6 months out. That's not.
It's going to work hard to get down there, I think.
Yeah. But I was really expecting a punch down at least through this 105, 104, maybe 103 to take those people out. And I was happy to start buying there on the other side of that liquidity hunt. And that's why I had orders kind of placed down here. And I'm more than, and that's, again, it doesn't mean I won't buy at a higher price.
What a shame that buy order wasn't in when the wick happened. But so I wanted to just highlight those sell orders on the graph here. So
Sure.
Yeah, here's the mouse. Yeah, you see, this is the. Oops, hang on. I'll roll this and move this. How do I move it? There we are. I think this was very interesting because this is real trading. This is an account that's made money, right? And here, there was clearly an error. We bought the market at 116, and the market promptly fell off a cliff. But these Shane had put in trigger orders to trigger sales if the market didn't go the right way, and all of that position was reversed out and zeroed out. So when this wick happened, our book was flat, and we didn't get wiped out.
We bought down here.
Actually, okay. So there's buy orders here.
The buy and sell little dots don't really coincide. They stacked. It doesn't really make sense.
Right.
But you just know it was in that time frame.
Okay.
So all those sell orders was selling on the way back.
You were selling on the way up.
Everything
okay.
I bought.
Yeah. Okay.
Yeah.
Oh, here we go. It's sell. Oh, so it's not. It's not showing the buy orders here.
It doesn't show it necessarily. It's not quite right.
Yeah, okay.
But we had orders down to, I think, as low as maybe 105 was our lowest.
Okay.
So when I woke up in the morning, I saw the wick.
Okay.
It went up, and we sold it all at 112, 113, or whatever it was. So it worked out for us.
Nice.
But again, those were orders I was happy to take under any condition.
Right.
So, and we're not going heavy. We're not going to risk 25% of the account on those, but we will risk some.
And that's the point. Risking 5%, 10% of the account, even and then that massive wick, it makes you money. Doesn't make you as much money as you could have made, but neither does it threaten your account or cause you a drawdown or damage our metrics in our fund.
Yeah.
And what we're looking for in our vault is nice steady growth that makes everyone comfortable. Yeah. So that people just feel happy to leave their money in there.
Yeah, I want to make sure that everyone makes money if they invest with us,
Yeah.
or if times are tough because trading is unpredictable, right? That there's not a big drawdown, so we
Right.
don't lose half the account or something crazy in one move because we're over leveraged.
Right. Yeah. I think a lot of mistakes that people in trading vaults make is that when you invest money in a vault or a fund or anything, you're taking a huge step of trust in the managers of that. And if you see more than a 30% drawdown, you'll just be terrified, and you'll pull your money out. And so it's crucially important that if you're ever running a fund for anybody else, that you never ever lose more than 30%. I mean, you don't really want to lose more than 10, right? But
sure,
but 30% is the number at which all of your clients will flee.
Yeah.
Right. So you just cannot risk it ever.
And what I wanted to show you is you can go into any of these strategies and take a look, and there's the Sharpe ratio. So the higher the ratio, generally considered the better. The share price, so that's going to calculate or just, because people are pulling money out and putting money in, and it's going back and forth.
Yeah.
And the max drawdown, and you want to keep that as low as you can.
Yeah.
Yes, you're not going to stick your neck out as much. You're not going to necessarily have as big a gains sometimes.
Right.
But it's you just have to look at the chart and whatever you're feeling comfortable with.
And it's worth mentioning that we've played this super cautiously. We've made 12% ever since the beginning of the share price is currently 1.12, so we've made 12% since the beginning. And the thing about that's a small return, 12% over 3 months. That annualizes out to 45% over a year.
Yeah.
But if you compound 45% over a year, you actually get humongous returns. That's an incredible return. It's like twice as good as the best hedge funds, right?
Yeah.
So you will boring compounding returns result in very, very wealthy people, and that's just the rule of investing. You go for 100% a year. Well, some years you'll do it, and some years you'll get wiped out. Net, you'll make nothing, right? So steady as she goes.
And that's the bane of all traders. Even if you're experienced, there's be those days where it'll just wipe out like 3 months worth of work,
right.
And it's really frustrating. It's happened to everyone.
Yeah.
So you want to do your best to avoid those big wipeouts.
Yeah. So that's
Anything else you want to talk about with Bitcoin? I think we're just going to take a wait and see.
Yeah.
I expect it to stay in a range.
Yeah,
this move up. I expect it. Maybe we'll get the sell order here.
I almost feel like sell the next rally, buy the next dip, and then on the next big dip, buy it and buy it for the year.
Yeah,
that's kind of how I'm feeling right now. That will change over time, but that's how I'm feeling right now. Right.
Yeah, and trading right now is just basically sitting around waiting for a tweet.
Yeah.
Or a news with the tariff war. And, oh my gosh, it's just craziness, right?
Trump tweets are paramount at the moment, for sure. Trump tweets, Musk tweets are probably important to listen to.
Yeah.
Trump being Eric or Donald.
Yeah.
And then anyone like Besant or talking about gold values and how they're going to fund the Bitcoin reserve and all that stuff. Definitely worth keeping an eye on that. And then anything that's tech. So AI, if you suddenly see headlines like JP Morgan concerned that AI companies are 10x overvalued, then we're probably going to see it drop. Right?
Yeah, I mean, Bitcoin is basically the market. It's a strong correlation, and it does follow M2. It does follow money supply.
Yeah.
And we are expecting money supply to increase.
Yeah. Money supply has increased by $1 trillion this year already. So it's got to go somewhere.
Yeah. All right, so that's it. That's it for this week.
Okay.
You happy with that?
Yep.
All right, great. Hey, good to see everyone, and we will see you next week.